Hey friends, it's Paul here, and I have a market update. Right now, I want to cut through the noise and let's talk about what's really happening in the real estate market right now, especially here locally in Arizona. First, mortgage rates and market volatility. It's been a wild couple weeks in the financial world, and for a moment, it looked like mortgage rates might start heading down. We saw the 30-year fixed rate drop to around 6.5%, but that didn't last long. So why? Well, turmoil in the stock market, weak demand for US Treasury bonds, and Treasury yields spiked. And the mortgage rates, well, they came right back up. Right now, rates are hovering just around 7%, and they might keep climbing depending on what happens with the bond market and global trade. Bottom line, this level of rate volatility hasn't really been seen since the early 80s. So what does that mean for the housing market? Demand is definitely softer and buyers are more cautious. Inventory is rising, which is a little unusual for this time of April, but pricing is starting to show signs of softening. As we head into the summer months and especially into the third quarter, across the nation, most experts believe that prices might move a tad bit lower in many markets. Now, listen up carefully. This is not a housing crash. This is a correction driven by affordability challenges, but not a flood of foreclosures. And here's what happens in a recession historically. Whenever there's talk of recession, buyers and sellers both get nervous. But here's something that most people don't realize. In the last 6 US recessions, home prices went up in 4 of them. And historically, mortgage rates drop during recessions. The one exception, 2008. It was a very different situation, which is driven by terrible lending practices, zero equity, and millions of foreclosures. Today's market looks nothing like that. So why this isn't 2008 all over again? Nearly 40% of homeowners in America currently own their home free and clear. Another 28% have over 50% of equity, and most homeowners have rates in the 2s, 3s, and 4s, which makes for a massively strong position for homeowners. People are not forced to sell, and so there isn't a wave of distressed properties coming. But what are we seeing? Longer days on market, more price reductions, and buyers are getting a little breathing room that they haven't had in years. So what should buyers and sellers be thinking about right now? If you're selling, the amount of eyes that you get on your property is key. So who you hire to market your property today, it matters more than ever. Then price it right and be patient. Those days of 10 offers in 24 hours, those are behind us. If you're buying, know your numbers. Get creative with your strategy. Sellers are willing to negotiate right now on price, closing costs, maybe rate buy downs, but above all, don't miss this. Here's the most important question. Where do you want to be in 5 years? That's what should drive your decision making, not scary headlines. The market that we're in rewards education, preparation, and working with people who know what they're doing. That's what we're here for. So if you're wondering how all of this impacts you, your goals, your situation, reach out anytime. Zero pressure, just real talk, good information. We've got your back.